That's right. I mean, we do look at conventional polls, and there's going to be an error associated with them, but we tend to look at stock market indicators like the Strategas Trump and Biden portfolios. Those portfolios are giving about a 45% chance for Trump, 55% chance for Biden. The S&P 500 is a great predictor in the 90 days before the election. That's giving it a slight edge to Biden. And so I would argue that Biden's the favorite. The big change over the last 3 weeks is the president has started to close the gap. And if that trajectory continues, this race is probably going to be very competitive. I think to your point on the CNBC swing state polls shows that there's a very strong correlation between the intensity of COVID and the anxiety of swing state voters. So if COVID remains restrained, the president's going to be competitive. If COVID flares back up, I think it's going to be tough for the president to win in that environment.
One follow-up, when you said that the S&P 500 is a good predictor, and right now it's giving a slight edge to Biden, based on what?
Yeah, so its stocks are higher in the 3-month period before the election. The incumbent party has won generally, and if the S&P is lower in that 3-month period, the opposition party has won. I think today that gain may have been reversed, but this has been true for every election since 1984. And it's been true 87% of the time since 1928. It's a very good predictor. And I would also say that the currency, the dollar, has been a great predictor. It's predicted seven of the last 8 presidential elections, with the dollar being weaker, favoring the incumbent party. The dollar is slightly weaker in that 3-month period.
Okay, interesting. So let's go into some of the specifics here. And we can start with the industries, or we can start with the scenarios. When you even look at the odds that you say would put Biden slightly ahead, what are the odds of a sweep still very small? So we'd likely be talking about divided government.
Yeah, the Senate right now is about 50-50 if you looked at the current polling. Our clients actually think that the Republicans are going to keep the Senate, and there's a case to be getting there. A month ago, Kelly, the Democrats were poised to pick up 6 seats. They would have had a 53-47 majority under that. And so as the president's numbers have improved, the biggest implication of that is that the Senate races have also tightened, and the Republicans have gotten their footing in some states where they were struggling, like Montana and in the Georgia seats. But they're still behind in Maine. They're still behind in North Carolina. And so it's a real struggle. This looks a lot like 2000, where you had a very close presidential race and you had a very close Senate, where on election night we didn't know either which party controlled either chamber.
So let's go kind of sector by sector here and presume maybe what you've outlaid, which is, let's say there's a Biden win, but a Republican Senate. What are the names that are most vulnerable? And also, what would it do to the stock market overall, based on what Elon was just telling us about his tax proposals?
Yeah, so first, I have to say that the tax proposal that Joe Biden has put forward is very aggressive. You look at the Obama, Bill Clinton, George Herbert Walker Bush tax increases, they're just about 0.3% of GDP. This is 1.5% of GDP tax increases for 2021. So it's a pretty big drag, even if fiscal spending is attached to it. And so if you get divided government, it's very unlikely you're going to get any of those tax increases with Senator McConnell running the Senate. But you get all the benefits of international trade. And I think one of the big implications of this election is that the market is reading Biden as somebody who's going to move in a diplomatic way in dealing with Europe and dealing with China. And that's negative for the dollar. And that's kind of helps U.S. multinationals, which have large foreign source income. So you get all the benefits of that, which are loosening financial conditions, and you get none of the tax increases. That's in the short run. But in the longer run, the market really wants more fiscal policy stimulus. And in that respect, they'd rather have an all-Democrat or all-Republican government, and you're just not going to get it. On July 31st, 2021, the debt ceiling needs to be raised, and so you see some austerity beginning to price in. You just asked me about what sectors would do well in divided government. Well, it's unlikely we're going to restructure the entire ACA in one way or another.
Right.
So managed care will do well. But defense may not do well if there's going to be austerity attached to it. That still means that the defense budget may have a harder time going higher.